Hi there, the markets have turned down by a bit lately. Has it reversed to the downside and where is it headed to next? I'll be discussing this and more in this video, so let's jump into it. In this chart that I shared a few days ago, I anticipated the S&P 500 to make a small sideways consolidation before continuing with a further drop to around 2800 level. Here's the updated chart that shows what happened. The S&P 500 dropped to around 2770 before turning up. Right off the bat, we can see the previous support zone has now turned resistance and the price stopped right at this level for the week. Next, we draw a trend channel to capture this price action. A breakout from this trend channel is what we are looking for to confirm the next wave down. The MACD is showing typical behavior of reversal. The first wave down pulls the MACD into the negative region and the retracement brings it back to zero, getting ready for another drop, which is usually an even stronger wave. The S&P 500 is looking bearish on the hourly chart, indicating more downside. Now, I've been monitoring this overhead resistance in rate for the last few weeks. So far, it has been a strong resistance zone that has denied any attempt to break it to the upside. It was tested twice in the last 2 weeks, and each time the price simply collapsed from this level. There is a support zone as well where the price bounced off a few times, right around here and here. If this support breaks, the S&P 500 is likely heading to the next support at around 2650 region. But we need to be balanced in our analysis. We need to ask ourselves an important question. What if we are wrong? A simple way to be balanced is to look for clues from the opposite angle. So we look for signs of a possible bullish move. As I mentioned earlier, the S&P 500 bounced off the support zone right around 2800. Also, the entire move up from the recent crash is looking like a wedge or a leading diagonal. Usually, leading diagonals will have a quick and shallow correction before the price continues heading higher. So there is a chance for this bullish move as well. I would like to see either a strong move that breaks this trend channel to the downside or a strong move that breaks this overhead resistance level to the upside. This is the hourly chart of Dow Jones. The story is also similar here. The recent bounce is being met with resistance, and there is a confluence of resistance formed by a trend line of recent drops right around here and here. The Nasdaq is a very interesting chart. The entire bounce from the recent crash is nicely encapsulated in this orange trend channel. Now, the channel was broken with a strong and decisive move right around here and was then followed by a choppy and weak correction. Let's draw a trend line to capture this correction and a parallel line that completes the trend channel. And there we have a corrective backtest. Simple, right? Anyone can do this and use it to make accurate and reliable market calls. The confirmation will come once this trend channel gets broken to the downside. And if it does get broken, the Nasdaq is likely heading to the next support zone right around 8250. Let's compare the weekly charts of S&P 500, Nasdaq and Dow Jones. The idea is to get a view on which market is looking strong and which is looking weak. This comparison is important and I'll explain why shortly. We have seen earlier the S&P 500 attempted to break the overhead resistance but got turned down a few times right over here, and that is also the top of the trend channel going back all the way to 2009. There are, however, a few support zones coming up, and there's a likelihood that S&P 500 might continue to hit higher from these zones after this correction. Also, the rise from the recent crash has been very strong. It might result in further price appreciation overall. The weekly chart of Nasdaq is again very interesting. Unlike the S&P 500, where the price is below the overhead resistance, the Nasdaq is above the same reference level. You can see this same reference level over here, making it a support level rather than resistance. This level is likely to support the price in the coming correction, from where it can launch further higher. I'm still quite bullish for the tech sector due to this. The story is completely different for the Dow Jones. Not only is it below the overhead resistance, but it is also right at this reference consolidation zone in S&P 500. Now, why is this insight important at all? Well, the reason is that the same pattern of strength and weakness is also seen in the component stocks of each index. I'll be making another video on these stocks, highlighting the weak and the strong ones. Do let me know what stocks you would like me to cover in the comment section below. And do subscribe and hit that bell button so that you will be notified when the video is uploaded. Meantime, Please give me a thumbs up if you find this video useful, and I'll see you soon in the next one.